Thank you. I'll try and keep this very high level and relatively short, because I think it'd be probably more productive if we can engage in some questions and answers, both within the panel and within the floor later on. The real estate market in Ukraine today is still very much Kiev-centric. DTZ are dealing mostly with commercial real estate. What can we say about commercial real estate in Kiev? It's very, very suppressed. There's high vacancy in all sectors, and there's three sectors that we deal with. That's offices, retail, and logistics. But it's not all a black story. If you look at the office market, although vacancy is now 22% in the market, when we look at the analysis of the figures, there's actually 100,000 square meters of more office space occupied today than there was on the 1st of January 2014. So that vacancy has been driven by a lot of legacy delivery that was commenced prior to 2014. That's driven up the vacancy. There has been pressure, obviously, on rents through vacancy, but also through economic factors, and that's pushed down the rents. But in terms of the actual activity of business and offices in Kiev today, surprisingly, it's more than it was 2 years ago. And I think that really demonstrates, if you like, the dynamic that remains in the market in Kiev in offices, and particularly in the IT sectors, pharmaceutical sector and agriculture. That's where we're seeing most of our activity now, and with a real weight towards IT development. Staying in offices, where else in Ukraine? Lviv is now extremely active in offices. We've been working on three speculatively commenced office developments in Lviv. And quite frankly, that's more than we're seeing today in Kiev. And a very, very, very strong IT sector in Lviv that is growing very, very quickly and taking a very, very proactive approach through the creation of the Lviv IT cluster towards the creation of a very vibrant market there. So in terms of the office market, we've got a lot of vacancy, rents are low, but I certainly, for one, see that there's a lot of opportunity there. Not so much today in terms of development in Kiev because of the high vacancy, but certainly there is opportunities for, let's say, the more speculative investors to come in and potentially acquire office space. I'll come on to the investment market in a moment. In terms of the logistics market, and obviously we're here talking about infrastructure, so logistics is very much part of the overall infrastructure process. The logistics market vacancy is about 11% or so not so high. It's been quite volatile. We've had vacancy down to 6% over the course of the last 2 years, but it's increased now back up to 11%. Rents are under huge downward pressure, and that's really been driven by the economic factors. In terms of logistics, there's very little speculative developments ongoing. However, some local developers are still building. And I think what's really the key sign that we see in the logistics market is that the stock is so underpriced. Rent levels are at such levels that you would not normally go and develop, but yet you can acquire now finished operating logistics products at materially less than replacement cost. And I think this is a very exciting opportunity for a number of investors, and there are people out there now in the audience who are both from funds and advisors to funds. So in terms of logistics, I think the angle really is one of investment opportunity today. The retail market is very, very challenging, very, very difficult. When you look at it from a very high level, you see that occupancy is still very, very high. Most of, or a good deal of that occupancy, and particularly in the older schemes and the schemes that aren't as well positioned within their markets, has been driven by the landlords having to accommodate with massive rent cuts, many tenants on turnover rents only, huge capital contributions to fit out, and basically landlords doing all that they can to keep tenants in occupation almost at any cost. There are some success stories out there, both in Kiev and the regions, but the retail market is extremely difficult. So what's happening in terms of actual development? The problems with development, at the moment there is effectively no bank finance at all. You can buy stock, good quality stock, particularly in offices and logistics at or below build cost. So there is no real driver for further development in these sectors, with the exception potentially of Lviv, where there isn't availability of quality stock. In terms of the investment market, we're certainly now seeing an increase in investment interest. And it ranges. We're seeing a lot of local enterprises who have accrued grivnas and are now looking to deploy those in the acquisitions of relatively small assets, typically small office buildings for their own occupation, but also logistics complexes that they can integrate into their whole production process or the whole business process. So it goes from the very locals and then up to the large scale. We've also now got Chinese investors who are looking at material assets. And these investors will be coming in both, if you like, at the corporate business level, looking at investing into manufacturing or the like, and then often tagging on to that an investment into real estate to diversify the entry into the market. Very early days, but some very, very real activity from those. As yet, although we had a lot of North American interest 6 to 9 months ago, that seems to have quietened down. European interest, as yet, remains pretty elusive. So we remain to see what's going to happen in those areas. So all in all, I think we've bottomed out. I think capital values are at historically low levels. Rental levels are at historically low levels. The opportunities are there. The availability of debt is going to be very important to attract certainly European investors, and that remains elusive. There's going to be reliance on such organizations as the IFC, the EBRD, IRC, to provide development finance where there is qualification for that, and it's going to be essential to make any speculative development or bespoke development even viable in the short to medium term. And I think that just about sums a high-level summary.